Mr. Unnikrishnan, Managing Director. Mr. Unnikrishnan, good morning. It's always a pleasure to have you with us here on NDTV, sir. Prashant this side. First quarter, sir, on most fronts, and let's just start with the revenue decline itself. Revenues disappointed. What's really happened, sir?
Prashant, no substantial disappointment. It is a 2.7% lower than the previous year same quarter. If you look at last, say maybe preceding 3-4 quarters, we were at somewhere around 14-15% lower than the previous year. Came down to maybe a 7% in the last year, and at 2.7% only in comparison, lower than in comparison to the previous year. So isn't it an improvement? So market may have an expectation, but we need to be realistic on that count. More important is we have orders on hand which is in excess of 5,200 crores, which is much more than our annual revenues. So the visibility is fairly good for the current year. But revenue recognition for the quarter will depend upon how we are able to be recognizing based on the project movement. So project movements were not substantial in the current quarter. So I would believe that on the top line, you will see an improvement going forward. And we are heading for a growth in the current year in comparison to a decline in the previous year. So that is my answer on the top line. However, on the margins, for example, yes, there is a decline, which is substantial because we have never gone to 7% equivalent in the recent past, at least in the past 2 years, which is a disappointment. But that's primarily on account of one of our businesses, that is the water and waste solutions, where there are losses, which had indicated to the market maybe a quarter back or 2 quarters back. And I did mention that it is going to be continuing for the current year, and towards the last quarter of the current year, we'll turn it around too. So once that comes back to normalcy, we'll go back to the 10% profitability that Thermax had been always maintaining. And there's nothing to worry on that count. But certainly, yes, in a quarter, when you have a substantial loss in one particular business, others were unable to be making up for it, and that too at a subdued level of the sales.
So it's, just getting back to the revenues, right? And I understand, markets, there's no bar to expectations. The actual decline was small, but I mean, the number against what was expected, there was a substantial miss, some 20% miss. Just trying to understand, sir, is it what you described as essentially slow order execution is slow, orders are slow moving essentially. You've got all these orders. Fiscal 14 order book actually grew 24-25%. But still revenues in the first quarter being down. So it's essentially orders not moving to the execution stage. That is what it is?
Some orders are at a slower pace. Frankly, there is no orders which have got cancelled. There are no cancellation. There is nothing where there is any order on a danger zone where it will get into difficulty. Predominant portion of the reduction can be ascribed to one major order which we expected that would recognize a lot more in the current quarter and in the last year's Q4 has got postponed to Q2 onwards in the current year. So you would see that major order getting revenue recognized in Q2 minimally, Q3, Q4 substantially. That's where you will see the improvement in the top line going to be visible to the market. So I would believe that Q2 of Thermax will be closer to what it is last year plus, and H2 of the coming year will be far superior than the previous year. So with that, you will have a revenue accretion by which you will see the growth of the company going on the revenue side, on the top line side. And as the numbers go up on the top line, naturally the bottom line also will improve, because the fixed cost has to be covered from the margins that you generate at a lower level. And as you have maybe more than 1,000 crore, 1,200 crore worth of a quarterly income, naturally your fixed costs are covered substantially, and you will have a good profits also going forward. And there are we are not under a margin pressure, Prashant, where the carry forward orders are at negative also. Yeah, there is one division of mine which has got a negative, which will certainly have some impact. But that's not going to be substantial, because that's not one of the largest divisions of the company. That is a 10% size of the division, size of the company, that particular division.
Okay, you said that the water business is the one which is under margin pressure, right? This is Anindya from the Delhi studio, Mr. Unnikrishnan.
You're right. Yeah. Yes, Anindya, please go ahead. Yeah.
You said that the water business is under a bit of margin pressure, right? You said?
Yeah, you're right. The water business for the past 2 quarters had carry forward orders which had gotten into cost overruns. Some government projects also got into substantial delays. They have put a pressure on the margins of that division, which is a profit-making division the previous, many years in the past. So when they have got into a negative, it would certainly have a dent on the overall margins of the company. And the energy businesses will catch on back to the double-digit margins as we move ahead in the current year. So I don't think one needs to be unduly worried about the margins based on what you've seen as a result in the current quarter.
Mr. Unnikrishnan, I remember you were here in our studio on the day then when the Lok Sabha elections counting was taking place. And I remember you were saying that you desperately need a new government to come in and move projects. What is your experience with the current government as of now? Are things moving faster?
Too early to comment at this point of time. However, some of the decisions they have made, especially for the industry, are very positive. Combining the energy ministries, that is the coal, power and the MNRE, that the renewable energy, put together and giving it to a good person like Mr. Piyush Goyal, who understands business fairly well, I think is a very good move they have done. And the committee put under Mr. Gadkari related to the Land Acquisition Act revision and the changes to be made for that, and the recommendation he has made, the committee has made to the cabinet, is again a positive move. And a lot more of announcement related to the industrial and infrastructure movement. And the latest one to say that anywhere in the country you can move in 24 hours, which means a lot more roads to be constructed.
I actually just wanted to focus specifically on Thermax today. Just let us know whatever you can, because I understand there are confidentiality issues also. But you did mention just a short while back that there were some cost overruns because of delays in government projects. How much is your exposure at the moment to government projects, and are you seeing some sort of speeding up taking place there?
Our exposure would be, including PSUs and the infra put together, could be around 20%. And there, it is too early to be seeing a reversal, and good number of the projects are coming under state governments, not the central government. Of course, the PSUs do come under central government. Otherwise, the municipal projects are under the state government, most of them, though the funding may come part of them from JNNURM, and nothing was happening in that area for the past year and a half. There, again, the government has promised there will be funding for the existing and ongoing projects, but will stop funding for any new projects. So I would believe wherever there is a stoppage of the existing projects will improve with the commitment from the government, and expecting further orders in that area will be limited because they won't be funding through the JNNURM anymore. In any case, Thermax is a company, our dependence on government is not much. But one of my businesses, water as a business, is a state subject, because water supply, sanitation is normally managed by the PWD. That is where the impact has happened. So that's 10% of the total Thermax size. So it is not that 90% of my company is protected from the government or infrastructure development related to the central government.
Okay, I'll just move from India then straight to your exports. Because I understand that last year you were talking about focusing a little bit more on Africa, South Africa, I think, the Middle East. Am I correct in saying that you had said that somewhere around you expect 500 to 600 crores of orders from each of these geographies, right? How much are you being able to do that? Is there a bit of a slowdown in Africa, for instance?
Certainly no. In the decision making, there had been a disappointment. We expected some conclusions to be happening in the first quarter, which have got postponed to the second quarter. But I don't see anything as a total drying up of the market. I'm fairly positive about the international markets, especially for the captive power plants and the large capacity boilers. And I would expect the numbers to be ringing in the coming quarters in terms of order intake.
All right. You also mentioned that about 5,200 crores worth of orders that you currently have already lined up. How much of it is executable in this particular fiscal, sir?
Exact numbers can't be revealed, but let me tell you, a predominant portion of this is revenue recognizable in the current year, and over 60-65%, 2/3 of them will be recognized in the current year itself.
2/3 of it will be recognized in the current year itself. And how much of it is coming from your export market? Just a ballpark figure.
Export carry forward itself is only 840 crores at this point of time. Okay. Predominant portion of that will be, hardly anything will be left out. Virtually everything of that 840 will be recognized in the current year itself. Yeah.
All right, Prashant has a question. Prashant, go ahead.
Mr. Unnikrishnan, just on that point on the subsidiaries, right? Can you tell us what kind of investments will you continue to make in this, in subsidiaries? Because you've been guiding for a turnaround, but I guess performances continue to deteriorate. There are fixed costs in that business. So can you just provide some clarity?
Prashant, of the subsidiaries, let me clarify to you. We got two joint ventures. One of them is a single largest investment of 850 crores of rupees done in a 51-49 joint venture with Babcock and Wilcox of America. This is for making supercritical boilers meant for the larger power industry. Now, this plant got commissioned in the month of December, and there are no order which has happened in the past, nor am I expecting anything to be happening in the say next couple of quarters. So that investment is continuing to be remaining idle for some more time to happen. It was already known to the market. And 100 odd crore will be the total negative which will be registered in that company on an annual basis, and a quarter over quarter, whatever the loss happening on that, 51% will belong to Thermax. That is going to be consolidated. Otherwise, domestic subsidiaries, Thermax Engineering Construction Company, Thermax Instrumentation Limited, both of them are profit making right now. Our overseas subsidiaries are in Europe, they are profit making. Our subsidiary in London, which is Thermax Europe Limited and Thermax Incorporated in America, both of them have made profit in the current quarter also. However, our subsidiary in China is set up in 2008, and it should take at least maybe 7 to 8 years for a company which has gone from India to China without a partnership with anybody to turn around and make profits. So, investment phase, and I'm very happy to say that there is a likelihood that we may be closer to being a turnaround or a positive at the end of the current year, the fiscal that we are currently on. So, subsidiaries negative that will continue to be finding will be on account of the joint venture with Babcock and Wilcox, which is a very large investment, and unless the power industry picks up and we start getting orders, and those orders get translated into the revenues of the balance sheet, which I would believe is a year to 2 years down the line expected, then only that subsidiary positive will happen.
Mr. Unnikrishnan, we were looking at some of the statements from the company earlier, and I understand that a lot of your new businesses in energy conservation, right, and making it more environment friendly. Yeah. But are these discretionary spend areas? Are they affected by your clients' discretionary spend decisions, or are clients building it into their current capex cycles itself?
There are two types in that one. One is where, for example, somebody has got a water shortage in a specific area, and the government says that I won't give you any more water for running your industry. So he doesn't have a choice but to convert the effluent of the factory into usable water. So there comes in Thermax with the technology for recycle. So there are, it's not discretionary, it's compulsion. Or get into something like maybe a sponge iron plant where there are waste gases coming from the entire plant, which if you convert that into electricity, you can sell and make money and improve its profitability. So it is a green attitude towards making money. Or a cement factory which has got again waste gases, convert that into electricity, and he is in need of electricity, utilize it internally. So there are discretionary in some areas, there are compulsions in some other areas. Where is the discretion coming in? See, in solar energy, for example, see, any building roof is sitter and idle for ideal condition for generating power, but it is going to be costing at least maybe an 8 to 9 crores rupees per megawatt as an investment. So it's something which is somebody's discretion. Should I be putting in that kind of money to be closer to the earth and environment and preventing climate change, and let me put that investment.
Right.
So those are the discretionary green and renewable expenses, and the others are where there's no choice for him but to expend the money.
All right, Mr. Unnikrishnan, thank you so much for joining us.